And I was chatting to a really nice British guy who had put a solar power project into West Africa. And I was asking how it had gone. And he said technically it worked really well. The panels worked really well, but it hadn't been as useful as they thought because people didn't have access to appliances that needed the electricity. So they built a microgrid. It was really stable, but it wasn't actually as helpful as they thought to the local population. So I said, what did they actually want? What do people really want? And he said, do you know what they want? They want a forward curve for agriculture and great weather forecasts. And it really struck me. And I came back and I work at the exchange and I said to the guys,
it's just first principles, really.
I think we might be doing God's work here because people would rather have access to a forward curve than to electricity in that situation. That's a mind-blowing concept, really, for us. But the forward curve just helps them make planting decisions, helps them make seed purchase decisions. And that's mega. And it's the same. The forward curve cannot be overstated. It's one of the miracles of modern finance. So, for me to hear that was actually, I was kind of almost emotional about the whole thing. I was thinking, wow, when I go to work, maybe I am doing something useful. Who knows? Because that forward curve is just so critical to everything from that African subsistence farmer through to a really sophisticated Western project developer with millions of tons on the go. They still need a forward curve. Mm-hmm.
So welcome back to This Week in Carbon. We've taken a few weeks off over the holidays, during which time the market kept moving, and I finally grew a substantial beard. So I'll acknowledge that and then first move on. But more importantly, we're returning with exactly the kind of guest that this show really was created for. Owain Johnson is Managing Director and Global Head of Research and Product Development at the CME Group, where he leads the team responsible for developing new risk management products, maintaining the relevance of some of the world's most important financial and commodity markets, and producing research across global derivative markets. He previously led energy research and product development at CME, served as managing director of the Dubai Mercantile Exchange, and earlier worked from Singapore covering Asian energy and commodity markets. And then, so in other words, Owain has spent his career studying how markets are built, how benchmarks become trusted, and how traders manage risk when the world refuses to behave predictably. He's also the guy who's quite literally written the book on commodity benchmarks. And I happen to call him a good friend. I've had the privilege of working closely with him during my time at Expansive when we launched the NGO and geo contracts. And so I've had a bit of a front row seat to some of the sort of the internal machinery. And so Owain, firstly, welcome to the show. It's a pleasure to see you again. And I'm really keen to unpack some of the stuff that you've just recently written, especially your new book, which I'll tee up in a sec.
Awesome. Thanks. It's great to be here.
Yeah, good. So you wrote, interestingly, a book called 40 Classic Crude Oil Trades that use real transactions, and then you delved into the people behind them to explain how oil markets actually work. As I mentioned to you before we started recording, I've placed an order for that book as well as with your new one, which is 40 Classic Trades in Environmental Markets. I'm really keen to unpack that book. Obviously, it's not yet released. I think it comes out in a few weeks, right?
Yeah. Start of August should be live.
Start of August should be live. Okay, good. And so from the blurb, the book examines carbon, biofuels, biomass, water, and the wider environmental markets complex through the trades that shape them. So it's not an abstract personal, so it's not an abstract sort of policy exercise, but a functioning, markets built by people willing to identify the risk, take positions, effectively create liquidity before the outcome was obvious. I'm really curious about all of that, but specifically the people specifically, right? Like how did people get into the environmental markets, the ones that you featured in your book? And I guess what is the common thread that ties them all together?
Yeah, it's been fascinating actually talking to so many environmental traders, and before that, so many crude oil traders. Now, obviously, I spend a lot of time at work talking to traders. That's my job. But we don't usually go into their personal lives, their educational background, their theory of life. So this has been a nice chance to actually get to know some of our traders a little bit better and see what motivates them. I think environmentals, it's slightly different to when you talk to a crude oil trader or an iron ore trader, because people don't come into crude oil or iron ore because they're passionate about that particular commodity.
So what do they have in common there? It's just following the money.
Yeah, or they're they're very interested in problem solving, or they like a challenge, or, they come in through operations, often physical operations. That's the path to the kind of more traditional commodities. And you get some of that in the environmental side as well. You get guys that have been worked at a registry or moved across from a platform. But I kind of almost would divide them into two, the environmental traders. And you could almost think of them as the believers and the non-believers. So the believers came in because they're passionate about the environment. They have done a master's in environmental science, they worked at a regulator, or they worked at carbon mitigation companies or developers. And from that, they've found themselves in trading. But the starting point for them was interest in the environment. Now, on the other hand, there's another bunch of people who are more they're non-believers. So it's not to say they're not interested in the environment, but they didn't come in with that passion. They were interested in trading. So, I talk about one of our interviewees who was looking for a job on the trading desk, and they said, hey, if you want to trade nat gas, you got to wait in line. If you want to trade environmental, we've got an opening. Right. Now I'm an environmental trader, and they often don't look back. So, that wasn't someone who, dreamt of the green agenda. That was someone who wanted to get into trading. So it's kind of it's a mix in the environment. And what I'm interested in seeing is, as the environmental markets get more and more professional and larger, I would imagine they would become more standardized and more like the traditional commodity markets, and traders would move interchangeably between a carbon desk, gas desk, coal desk, and traders would move around a lot.
Yeah.
We're not quite there yet. We've still got more of the guys that were passionate originally, I think.
Interesting. And so what keeps them in their role? Because the markets, like all markets, they're volatile, right? They go up and down. Carbon markets have had a good run, and now, it's hopefully coming back, but it's been pretty lean for the last few years in terms of to trade flow and liquidity. What keeps folks in their seats?
I think it's a combination. Some of the people I speak to have been there for a while. So, you'll know there's a lot of environmental traders with a lot of years under their belt that were in the first incarnation and the launch of the EU ETS, and they've been through one or two pretty awful downturns already. So when things are a little slower, it's not something they haven't seen before. It doesn't make them panic. And these are not necessarily always guys that are chasing that, 10 million bonus and want to jump straight away to the oil desk. These are guys who've built a solid career and they know people. One of our interviewees said that some of the carbon conferences are like a school reunion for them. It's been so many years, so many decades working together that it's just, they know everybody and everybody knows them, and it's great. So I think that the people keep the people in the market, but also I think some people, you develop some pretty specialized skills, I would say. And one of the things that came out of it, that just the range of interviewers that I guess I hadn't expected, was how many of them came from a legal background.
Yeah, right.
So I don't think, when I talked to the 40 oil traders, I don't think I met anyone from a legal background, but probably, a quarter to a third of the environmental traders had some kind of legal background or legal interest, maybe a degree, maybe they were, on the regulation side. So I think, and that was really important to them, because knowing the regulation and the law behind it allowed them to be better traders. They didn't get caught out by changes. They understood the wrinkles of the market. So a lot of the time, the advice that was coming through in the book for young people was study the regulation. You can't be a success unless you know what underpins the whole market. So I think also sometimes, they get so much great specialist knowledge, you wouldn't just walk out on that because it's been a slow year.
Yeah, no, that makes total sense. I feel like you're describing me in a way with the legal background piece. But no, absolutely, because as you said, it's that highly specialized knowledge and understanding. And ultimately, these markets, for the better, well, most of them are policy driven markets, right? So that legal expertise, the understanding, and taking the time to understand how those policies are structured, or where and how they're being shaped is really important, and that can help the traders to ultimately identify where there's that arbitrage. So that makes a lot of sense.
Yeah, so, you really see that. Yeah.
Yeah. No, sorry, please continue.
No, you really see that even carbon, we know very clearly, you and I, that how driven that is by regulation and by stroke of a bureaucrat's pen in Brussels. But it's true equally for ethanol or biodiesel when governments change blending mandates, or they create water markets because they want more efficiency, or you just see how driven all of the environmental markets are, not just carbon, which is super obvious, but all of them across the board.
Yeah, interesting. And so, can you give us a glimpse into the folks that you spoke with? Is it an anonymous conversation, or are they featured as individuals?
No, I'm
with
very
their names?
fortunate that they've trusted me with their names and reputations, all of them.
Okay.
So I hope I'm not going to get anyone knocking on my door in a few weeks' time. So no, but I guess the two opening chapters I'm very proud of, because we see there the guys that created the first trades really of any environmental commodity, which was in acid rain in the early 90s in the US, the SOx and NOx acid rain scheme that George W. Bush created, it was a guy called John Henry, and then following up from that, Dr. Richard Sander, who's very famous in this space, creator of the Climate Exchange in Chicago and Changchun and other places. But those two guys, John put the first first acid rain trade together, and then Dr. Sander did the first auction, which is the first environmental auction, which is a model that we've seen all over the world from then on. So that was really fun, because seems to be this standard belief in the market that Europe invented environmentalism, that, the ETS was the first scheme, that everything flowed from Brussels in Europe. But actually, the US was, with the acid rain scheme, was the beginnings of all of this. And that was a phenomenally successful scheme. The acid rain went away with very little expense relatively, because the market sent such good signals. And I think that initial success, the fact that those guys built markets that worked right out the bat, has really carried the rest of us for the last subsequent 30 years or so. Because it was just such a great example of how a market ought to work, and how it could work, and how it could deliver environmental outcomes at a great price.
Yeah, great. I love that, and I love seeing that efficiency of those markets. And like you said, it's effectively US led very much in the early days, right? Cap trade as a concept essentially born out of the United States, and then obviously just developed extensively in terms of the size of the market in Europe, but. It's fascinating. So okay. So can you give us an example of some other folks that you've spoken with? Because it's not just carbon. It's not just some of the early markets around SOx and NOx, but it's broad, right?
I've been fortunate that I've kind of been around the world and through the decades. So I've got some fantastic tales of the early days of Brazilian biofuels, from when Brazil imported ethanol rather than exported it. And Brazil's like now the Saudi Arabia of biofuels. But back then they were importing, and they were bringing alcohol in from South Africa. They're bringing Russian ethanol in. So the fact that, just the story of how that flipped is an amazing thing as well. So I really enjoyed some of those chapters. The birth of the water credit market, that's really fun as well. So yeah, we've been able to meet people from all over the world. I've tried to have a nice mix of folk from China, Japan, South America, and then obviously US and
context.
Europe, who are the big heavyweights in all of this.
Yeah, great. And also, okay, so that's interesting. So it's a global context in terms of the folks that you've featured into the book itself, and also spanning time, right? Like that's the other critical aspect. So how have you seen this sort of evolution over the decades?
I think anyone who's been around for a while has got the scars on their back from various, and we've got tales in there of when the ETF delinked from CERs, and we've got stories of like these kind of major market breakdowns essentially, and we've got tales of people who survived those and are still successful to this day. But yeah, I guess we're tracing through some of the wins, but people are acknowledging it wasn't easy. Anyone who's been around has had some tough times in these markets. What I think we're seeing now, though, is greater professionalism, because the guys were always professional, but certainly we're seeing a greater range of participants. So it's not just the big utilities that are trading carbon. Now we've got funds, and we've got people trying to do complex funding options. So I've got a section on carbon finance trades that existed to help project developers, so barrier options, those kinds of things like that helped them fund their projects. So we're trying to look at all of the aspects of carbon, but you do see a greater now. A greater diversity of markets and a greater diversity of firms involved, I would say.
Yeah, that's great. I guess I'd be remiss if I didn't ask about the gender quotient. And in the background for folks watching, I've got a little kid who's just supposed to be sleeping, who's just come into the background, and I'll sort that out in a sec. But in terms of gender, like the environmental commodity markets certainly has I think, a better gender balance than what oil would. Do you see that borne
Do
out
you
in the
know,
stories as well?
I was disappointed, Rene. I really was. I thought that there would be a lot more female traders to speak to than there were easily, because, as you say, you expect the older school traditional commodity markets to be a bit more middle-aged men focused, and I've got nothing
Yep.
against middle-aged men, being one myself. I know you're still young, but some
Mate,
of us
I'm
got grey
middle-aged as
hair.
well. Don't worry. I was reminded about that this morning by my mum, who said, I was speaking to her, and I said to her, you talked about school reunions. I've got my 30-year school reunion coming up in October. And she said, she paused on the phone. She's like, 30 years. She goes, wow, you're getting really old. So
Thanks, Mum.
I'm definitely in the middle-aged camp.
Yeah, bless you. But yeah, what struck me, I think, the way I kind of rationalised it to myself was, because you're right, if you go to an environmental conference or if you go to COP, it will be majority women. It will be probably 60-40, 55-45. Whereas if you go to a big oil conference, it'd be the other way around. But I think a lot of the women have found roles in the carbon space, but not necessarily trading in the markets. So I think project development, the lending side, the on the ground
advisory
work. So I think, but if you work in oil or iron ore, I keep using those examples, it's going to be tougher to find jobs around that in the upstream or in the downstream. The gender balance is horrendous at the mine or in the field. So you're more likely to gravitate towards trading, I think, if you're a woman with an interest in that commodity. Whereas in the environment, there are so many other roles around that I found there were slightly fewer traders than I've been expecting, to be honest. I managed to secure interviews with some great female traders. So we've managed to keep that diversity, but it was harder than I was expecting to maintain the balance. And certainly, not what you would think of in the environmental markets.
Okay. Yeah, no, I guess that's fair enough. As you mentioned that in terms of the broader diversity of at conferences and in the industry at large. But when I look at trading desks and look at our trading desk, for example, it's male dominated, and it's not an accident. It's by default, effectively, that the candidates that are applying and are available tend to be guys, and it's that classic sort of trader kind of DNA, right? In terms of risk propensity and kind of just the stress that goes on with trades, trading desks. Tends to sort of attract certainly the type of guy.
Some of the interviewees also did talk about it was still a sexist environment on the bank floor in the early days of the EUAs, or which I think any woman trader would tell you from those days. But there was that deterrent factor as well in play. People just talk about being paid less, being invited less to stuff. And, there was that. I think I'm not hearing that so much nowadays, thankfully. But I think in the early days, the behavior wasn't always the best. So that was a deterrent factor there as well.
Yeah. Okay. Interesting. And so I guess, what are some of the other interesting insights in terms of common threads across the different folks, given that they're trading ultimately different commodities, right? Whether it's biofuels or water. Water's a really interesting market as well.
Correct.
Firstly, what are the sort of other common threads apart from, like, as you mentioned, their background and kind of passion that's bringing them, but and what keeps them in the jobs. But any other sort of interesting tidbits around the person?
I think there's a very heavy focus on reputation, personal reputation in terms of your name awareness, but mainly your integrity, people being aware of your integrity, because, we both know these aren't markets that are traded super anonymously, high liquidity on screen. So these are markets where a lot of business is still conducted face-to-face or over the phone or through a trusted broker. So people tend to know each other. And I think it came up again and again that it was important to people to do the right thing and look for wins, because they did want a longer career in these markets. And so it was important to them that they didn't take their counterparties and nail them to the floor. There had to be some positive outcome. And if things went wrong, you went to look for a solution, rather than squeezing every last cent out of the other guy, because you might be in the other position the other day. So, because these are not, it takes a while to get a trade done. And, it takes a lot of relationship work, I think, and trust. People really, really like to talk about the relationship side and the integrity side. One of the guys said, I can come back from a losing trade, but I can't come back from losing my name in the market. And, that came up across the environmental market. I think, again, it would be different if you were trading stocks and you were trading against, 100,000 other anonymous people, half of whom might even be bots and algos.
Mm-hmm.
When you're in the environmental markets, you're going to know the people you deal with. You really are.
Yeah.
And I just even saw that when I'm interviewing people, they're like, who else have you interviewed? Oh, yeah, I worked with him. Yeah, he's my friend. Oh, he's my, godfather to my kids. So
Yeah.
there's a network out there.
There's a network out there.
You know very well. And so, no one wants to be the guys that did something terrible. It happens, but people don't say that generally.
Yeah, no, that's really interesting. And ultimately, that's how I was raised in this space, right? With really good mentors. But I was always told, your word is your bond, right? Like there's no trade here that you want to do where you, like you said, where you scalp the other guy just to make a few pennies, basically, on the dollar. Like, if it means that then you're seen as that vindictive guy, because the liquidity will dry up. You won't see the trade flow coming this way. And on the other side is if you give somebody your word on a deal, right? Things always go wrong, right? Like they just find a way that things go wrong, right? And there's a lot of factors that we cannot control, right? For example, in the carbon side, there's certification risk, timing risk, a whole bunch of different risks that can go against you. And to your point, but it's just like, okay, well, I committed at this strike price. I'm going to deliver at this strike price. Even if I'm underwater, I can come back from this. I figure it out. Nick DeLeva, my business partner, always had the adage, on our desk, which was, look, 9 times out of 10, like if we're winning, then that's great. But that one that we go that we lose, like as long as it's not going to sink us, right? It doesn't matter. We take that one on the chin.
Yeah. I think that's a really mature way of looking at it, because you want to fight another day. Because again, you were asking about things that cut across all of the guys, and stress is one of them.
Stress is one of them.
Yeah, it really did cut across. People were talking about how tough it is. Some of the guys that they don't sleep, they've lost weight. They're
I was the other way around, not sleeping and putting on weight.
Yeah, I mean, yeah, maybe, mate. Yeah, the carbon diet.
Yeah.
But the traders, one of the guys said, I ground all my teeth down. Another, just stress at night, dreaming about positions. People are saying this was tough. This is a tough gig. There's not many jobs where at the end of the day, you're measured by your P&L. You're measured immediately. Your self-worth can be very tied up in a daily P&L, which is not always healthy. And a lot of guys have certainly felt that. And, we've seen these big moves. The market to market can move. The government can step in. You can have the greatest trade on, and then the rules can change. And suddenly
then the floor goes out from underneath you. I've seen that. Folks who were king of the hill one year in terms of performance, et cetera. And then the next year, they just, it went against them. And it was not a strategic error. It was just a policy stroke of pen issue, and effectively they're underwater big time, right? And now that stress, it's like you said, it's how long can you survive that if the market stays in that reverse direction? It's a difficult one for sure.
Yeah, and what tools can you use to deal with that aren't having a drink, which is an often a trader's favorite, as we've seen over the years, both of us, I'm sure. But, that's not really going to be the way long-term to manage the stress. So, different people talk about different techniques. Family life seems to be a winner. Some kind of sport seems to be a winner. But, some of my interviewees were talking about meditation that they do, or just ways to disconnect. Because, this is not an easy job. People are not getting paid for free in the trading space. So,
yeah, fascinating. I'm curious if I can go back to one market that I had some exposure to when I was in Australia early on in my career, and then when I was at CBL, and the Expansive effectively had acquired H2OX, the water exchange, and so it's a really interesting market, water trading. Can you give I don't think our audience is that familiar with it. Could you give some context in terms of some of the interesting trades that you learned in and around water?
Yeah, so there's really only a couple of genuine water markets out there, and I think California has a water market which trades. But really, the pioneer and the most successful one is the one you referred to, the Murray-Darling Basin in Australia, and I have to say it works. It seems to work really well. And so, like all of the environmental markets, if I just pause for a minute, and this is like a bit of a sidebar, like brackets, you can criticize any of these environmental markets if you are a deep green, I don't want to say the word fanatic, but if you're really very, very deep green and you think people should just stop doing all of this stuff, or it should all just be taxed. You can criticize voluntary carbon, you can criticize ethanol and biodiesel for, impacting on the food side. There's criticisms of all of these markets. I would say they're still the best of the options we have out there. Obviously, I work in the markets. I believe in markets. But water is another really good example of that, where you will find people who hate the concept of the financialization of water. And they have a fair point. This is a fundamental human need to access water. It shouldn't be in the hands of, 10 hedge funds, would be the argument. And I'm very sympathetic to that argument. So you have to get the design of the market really spot on to stop that happening. Because when you do, and maybe an old friend of yours, Mr. Lex Batters, talks about this in the book, but he talks about that, how when you get it right, what you are doing is actually allocating a scarce resource properly, which is the whole point of economics and markets. That's like the whole thing when you start doing your first class in economics. It's about how do you allocate resources to people? And water is a classic one where you get this, again, more economics, but you get into the tragedy of the commons where everyone wants to use as much as possible before the next guy takes it. So actually having a market has been so helpful to send price signals in Australia to actually tell farmers, okay, this is what this input is going to cost you. And if you want to change crop and use something less water intensive, this would be how you could sell that certificate back out to the market. That's a really powerful tool. Farmers are super smart. Farmers invented futures. CME came out of the farming community in Chicago back in the 1840s. So when you tell farmers, here's a market, they'll get onto it and they will make that work. They'll just factor it in and they'll trade crops against other crops and the water content. So I think that the Murray-Darling is a really nice example, and Lex describes it all very well in one of our chapters.
Yeah, that's fascinating. Yeah, no, definitely a blast from the past, Lex. If you're listening, good to hear your name in this space. I guess for folks in the audience that aren't so familiar with the water market in the Murray-Darling Basin, like you said, it is a strong design. It's had its critics, that's for sure, but certainly a strong design. The way it works, obviously, with the flow of the river, right? There's water allocation, and then there's water rights that people have, and there's a algorithm in terms of structure around who can trade those rights. You can only trade with to certain proximity, but with one another, and more downstream than upstream, etc. But ultimately, to your point, the farmers can understand, given the economics. So because Australia is so subject to droughts and floods, when you're in a severe drought, they need to shift their crops, and it just makes total sense. So really water intensive crops like cotton and other crops need to be switched, right? And there's a financial incentive for doing that, as opposed to being penalized and having to rip everything, root and stock out. And essentially that market does work quite well. And to use, like you said, it's not necessarily a financialized market. It's just allowing for pricing that externality and allowing those farmers to be able to hedge out some of that risk, which is a really key component to a really very difficult discipline in terms of
I think that's the beauty of seeing how environmental markets can be so disparate, and yet the common themes are that pricing something that's valued or pricing something that's undervalued gives you an incentive to use it. I mean, one of my favorite chapters is an interview with Mr. Demas, who is one of the Indonesian exporters of used cooking oil, which goes into the diesel pool. And he started himself going around with a jerry can collecting waste products from restaurants. And he's built that up into a fantastic business. And now he exports it. But you've taken a resource that was essentially useless and you've managed to transform that into something valuable that's displaced hydrocarbons. I mean, there's a tremendous thing. So once you put a price on something, it's worth someone's time to do something about it. And that's what happened to him. He was working as a policeman and he wanted to supplement his income. So he'd have an hour in the evenings collecting used cooking oil in a jerry can.
Yeah, interesting. And then build a business from that and be able to scale that up. It's interesting, but coming back to sort of this paradox that you described earlier around, at the heart of the criticism is that, many critics argue that effectively, markets got us into the climate crisis, so they can't really get us out of it, right? Renat and Steve wrote the Carbon Paradox book, and they kind of framed it in that markets paradox. But ultimately, to your point, it's that without markets, price signals, and private capital, like, how do we actually finance the transition at anything that like approaches the required scale? And the answer is we can't. So we need to rely on markets as a solution, right? To be able to ultimately, be able to shift behavior.
Yeah, I couldn't agree more. I think this is the world we're in. If we lived in a different world where you could raise taxes in the developed world enormously, put a carbon tax on, transfer all that wealth down to Southern Hemisphere for projects and schemes and carbon mitigation, that would be awesome. But until that day comes, I think the best tool we have is markets. And, what we want to see is people making money out of these projects and out of these markets, because they'll carry on and then they'll do more of it. To the used cooking oil example, Mr. Demas made money on his first jerry can, and now he's shipping tankers to Europe because he kept going. And so the value becomes,
he kept reinvesting into the business and kept going.
Yeah, but people need to make money, and that sometimes I think is annoying to some of the environmentalists, that there's a profit motive. But sadly, human beings in our fallen state, it does matter. It does matter. But ultimately, that's what enables. And I think we're seeing this evolution, certainly in carbon, around more and more sophistication of the market, right? And that sophistication is translating into really that financialization of the market, not necessarily commoditization, but financialization. You talked about earlier around interesting structures around project finance, etc. And I think that now there's that intersection between the financiers and project side, and ultimately the market folks sit right in that nexus. And it's really interesting to see the increasing sophistication of folks in this space, that it might have come from the environmental tangent, you said, driven by passion, masters in environmental finance or whatever it might be, and now, like, going into more of like the fund side, right? For example, as an example. Yeah, and I mean, we just see this on the futures side, right? That it's, even if you're not an active futures trader, the fact that there's a forward curve out there just makes your life so much easier.
Yeah,
you can now take a forward curve from the CME website, show it to your banker, and try and get financing. Or, it just gives you that independent valuation of what a project might be worth down the line, or what a position might be worth. Apart from the fact that, then you could potentially hedge and lock in and manage your risk and all that good stuff. But just the existence of a forward curve is critical to market development. I was really struck by this, and it's been like a touchstone to me. I was at COP in Baku, so what was that, 2 years ago, and I was chatting to a really nice British guy who had put a solar power project into West Africa, and I was asking how it had gone, and he said technically it worked really well, the panels worked really well, but it hadn't been as useful as they thought, because people didn't have access to appliances that needed the electricity. So they built a microgrid. It was really stable, but it wasn't actually as helpful as they thought to the local population. So I said, what did they actually want? What do people really want? And he said, do you know what they want? They want a forward curve for agriculture and great weather forecasts. And it really struck me. And I came back, and I work at the exchange, and I said to the guys,
it's just first principles, really.
I think we might be doing God's work here, because people would rather have access to a forward curve than to electricity in that situation. That's a mind-blowing concept, really, for us. But the forward curve just helps them make planting decisions, helps them make seed purchase decisions. And that's mega. And it's the same. The forward curve cannot be overstated. It's one of the miracles of modern finance. So, for me to hear that was actually, I was kind of almost emotional about the whole thing. I was thinking, wow, when I go to work, maybe I am doing something useful. Who knows? Because that forward curve is just so critical to everything, from that African subsistence farmer through to a really sophisticated Western project developer with millions of tons on the go. They still need a forward curve.
Mm-hmm. Yeah, no, definitely, because it's the best risk mitigation tool that's out there, right? Having and also from the financing side, right? Like, folks can understand what that forward curve is, they can start to hedge out some of that risk, etc. But in that, can you give me some examples of forward curves and environmental markets where now there's been a development of benchmarks? Obviously, the EU ETS, EUAs come to mind, but other markets that developed?
we see it a lot in the EUAs, but even now in the voluntary carbon markets, we're seeing active futures trading. So, I've got a nice interview with Simon Crooks about his trading on the voluntary carbon futures market. So he talks about playing the inter-year vintage spreads, and because they trade a lot in December versus December. That's the classic structure for voluntary carbon. So you're definitely seeing that activity. And that, again, that really helps. So I talk to project finance guys a lot. I talk to project developers, and this is absolutely fundamental to them, because for the first time they've got something they can show externally, and that makes such a difference. Yeah. So I think across the EUA is a fantastic price signal, and you can't understate it. But even in these smaller niches around the voluntary and around Corsair, you're starting to see that activity develop. And that's just fundamental. Price signals for airlines, price signals for developers. It's just massive. And we're seeing the same thing. We're talking about carbon here, but the same thing on the ethanol and biodiesel, the active forward curves, telling people the value of a switch or the value of blending. It's mega.
Yeah, that's interesting. No, we've had that conversation internally around the biodiesel opportunity itself. I guess, what lessons do you think that the environmental markets needs to take from the more established commodity markets like oil? You talked about iron ore, metals, and other commodities. What should we be gleaning in terms of insights for environmental commodity markets?
I think the boom and bust cycle needs to end, really.
Yeah.
If you have a bad year on the crude oil desk, you don't think we're going to exit crude oil or worry if the bank will shut the crude oil desk down. You just say, right, we might need to change out the traders, or we understand that, something geopolitically affected our position, but it's never an existential threat to the whole business. Whereas in some of the environmental markets, you feel like you're only ever a few bad quarters or a bad year away from your institution just exiting the space.
Yeah.
So there's not really that kind of longevity confidence that I think would really help. I mean, there are some very long established environmental desks that have been trading solidly for 30 years, but there's a lot of guys, and we've all seen it, who've been in, been out, been back in, been back out again. And that just doesn't really help with the rhythm of the market and the market development to get to see people churn, essentially. You want people in the seats. So I just think that there needs to be more understanding that this is a long-term play. You might have a bad year, and then you might have a great year, and you've just got to average out across, which you would in any other standard commodity. So I would like to see every trading house and every major and every bank just sticking at it.
Committing. Yeah, it's interesting. I was speaking to a bank earlier in the week, and it was obvious to me the person I was speaking with effectively, like they just lack the institutional knowledge, right? Like because the bank had gone in and then gone out, and it just kept picking up and just uprooting every single time. And then when they could sense that the market was sort of returning, then kind of just trying to replicate an understanding of the market, but they lacked that nuance. And I think, to your point, having that longevity means you can have those people in seats and they can build that institutional knowledge, train the next generation and bring them up, understanding the way of trading and what is the thesis of that organization. And it doesn't necessarily need to be shooting the lights out every single year, like you said, but effectively having that conviction so you can have longer trades as well that can start to pay off in 5, 10, 20-year type of cycles as well, right? As opposed to just the individual days.
Absolutely. And just think of all that wasted effort with signing ISDAs and setting up counterparty credit. And these guys are doing all that, and they spend 6 months setting the desk back up, and then the desk might only last 18 months. And then a year later, someone else is back in setting it all up again. It's just that friction doesn't help. So, you're actually better maintaining the position. So I hope that would be my ask of all the treasurers globally. Stick
have
with
a long-term vision and continue and commit. Yeah, I would reiterate that. That's interesting. Can I just come back to some of the trades themselves? I'm just thinking, you talked about, it's not all the glory trades, but so just curious, was there a chapter that was hard to write because of the people involved remembered the trade differently, or there was just like a negative connotation associated with the trades itself?
Yeah, I mean, sometimes you're stirring up some pretty difficult memories for people.
I was going to say, are there wounds?
Yeah, right. I mean, you are reopening some old wounds, or, people are looking back and saying, well, why did they do that? Why did that happen? Particularly, I think the removal, the breakdown of the voluntary to like the JI, all that, the breakdown of the CERs, the JIR, that there's a lot of pain still in the market around that.
That's absolutely institutional and industry-wide trauma on that one.
That's a great way of putting it.
Because the ramp was so strong. I just remember being at First Climate back in those heydays. Yeah. And then it just shifted and
Yeah,
drastically
and
fell right off a cliff.
there's a lot of people who had some lovely businesses and some great strategies. And, one of my interviewers he said that a trading desk should be like a tripod. It has to have 3 strategies that work.
I like that a lot. It's interesting.
You can't rely on 1 or 2 things because the government could change one could go against you. So you've got to have a minimum of 3 strategies that work. So I kind of like that image that, great. If you've got 4 or 5, you're super secure, but your minimum viable desk has got 3 things that is working on that work. So I thought that was really nice because some of the guys said at the time I was all in on whatever
One
it was.
trade.
And then they took it away from me. Someone in Brussels signed something and suddenly, I couldn't feed the kids next week. So, you need then a plan B and a plan C. You need 3 things running at the same time. So yeah, words of advice for young people. There you go.
I like that. It reminds me of what Sasha Laffel taught me at First Climate. But he said basically, you always need to have that diversification. This business may be booming this year, but we don't know if that's going to continue because there's no guarantees in this space. So you got to plant those other seeds, right? So voluntary was always a little brother to the big compliance markets. And then there was a time, obviously exception of EUAs, but certainly the CDM side that went away. And voluntary actually did pretty well, and there was other businesses that did pretty well. We look now at electricity markets, REX, etc., also doing quite well in terms of liquidity. So it's fascinating.
We talked at the top about people specialising and becoming quite specialist, but I would say this: you specialise within your sector, but you can't just rely on a single market. Maybe even the EUAs, mega as they are, it would be hard just to think about EUAs. You would also want to think about the clean dark spread, or you'd want to think about other instruments around that. But certainly, I don't think you could be pure voluntary carbon futures trader. You would want to have a foot in a few different camps just for that kind of triple strategy or diversification that you mentioned. So a lot of the guys we talk to, they do have a toe in a few markets. Yeah.
Interesting. And was it? Was the majority across derivatives in terms of the folks that you featured, given that's kind of your expertise, or was it mostly physical?
No, it's mostly physical. The Lord knows I love derivatives markets, but the stories are always more interesting in the physical market, right?
Yeah.
It's like, when you've got, people getting trapped on an ethanol vessel and the Russian train not getting through and, or you're loading a jerry can in Sumatra of UK. It's just a lot more vivid than, being clever at your screen. I've got some lovely derivative stories that are great, but the physical is just so colourful. I would be doing the reader a disservice if I didn't focus on some of those fun stories.
Can you give us an example?
Well, some of the guys talking about particularly, I guess even the project development side, we've got people talking about, being on the ground in Colombia, bringing the JI to Russia, first Russian landfill projects, Argentinian city gas. We've got some really fun, exotic locations where people manage to see a concept and get in there. On the ethanol and biodiesel side, the range is quite unbelievable of just and particularly even like the feedstocks. So the feedstocks can be so incredibly varied. You can be picking up stuff in Indonesia, stuff in Singapore, Malaysia, then go on to Korea, bring all that across to Brazil, blend it, take it to the US, pick up a credit, take it to the logistics side is amazing to me. The physical logistics. I've got
and they make or break, right?
Yeah, and one piece can fall out. You can be putting together 15 counterparties on the same vessel. So, just the complexity of the trading some of these guys are doing, which you just wouldn't think about when you buy and sell iron ore or crude, it's one buyer, one seller. You can fill a cargo for one guy. These are big units, big guys. But when you're doing feedstocks and you're doing used cooking oil, you're mixing and matching and you're trying to fill different parts of the ship with different people's parcels. It's a real game of chess. These guys
3D chess whilst it's moving on a ship.
Yeah, correct. With the freight rates changing. And it's, again, coming back to it, this is not an easy job. Respect to the people. When you finish that book, you'll say, wow, these guys, they're working for it. they might be getting paid, and some of them I'm sure are getting paid very well, but man, they are putting in the hours and they're getting the stress. And at the end of the day, they're working in markets that ultimately help us all. So happy days.
Yeah, fascinating. I mean, obviously your eyes are lighting up when you're telling these stories. I can't wait to get the book because I really want to dive in. Like you said, there's a very small degree of separation in terms of folks here. So either I know that trader, or I know of them by their reputation, or know someone who worked with them, and I can get some juicy stories about it. But it reminds me also of the book The World for Sale, Javier Blas. I think in the first few chapters, it was just fascinating because it talks about the early stories of commodity traders opening places like Libya and others, and just going where like conventional institutions and like couldn't, and effectively these were swashbuckling kind of guys going out into these frontier markets and effectively dealing with overcoming obstacles and unlocking that supply of oil. And to your point, it's a similar sort of concept. Have folks that are attracted to problem solving. You said that at the introduction, right? Really complex, three-dimensional kind of chess, as you said, for a lot of these markets, but ultimately driven in large part for doing good and getting compensated as a result of if you get it right.
Yeah. I mean, the poster chart for that in the book, I think, is a guy called Omar El Nemar, who did the first Egyptian, it's really the first sub-African onshore carbon trade. And he's a project developer based in Egypt, and it all came out of the Sharm el-Sheikh COP, and they managed to get it together. And he's saying, I want greedy people to be buying my credits. I want people to treat it as an investment class, because that's the way. And within Africa trade, so going back to where a lot of this climate mitigation needs to happen in developing countries. So when people are developing projects, they're developing in developing countries. So they are being pioneers. And Omar's working a lot with peasant farmers in, the Upper Nile. And he's managing to sell credits within his country and build a national ecosystem. That's a tremendous development. Then it doesn't just become this export business.
But it also creates a national champion and a story that then governments also want to rally behind to try to kick off and, kickstart an economy in and around that, because it obviously brings back revenue in terms of tax revenue to the country, but also provides particularly employment opportunities in country, right? And it upskills a lot of the people there. So that's really fascinating and interesting. I guess just kind of conscious of time, but can you give us potentially the most lucrative trade, or like insights on if you measured it? Anyone in that talked about the most lucrative trade in the space?
There's a question. I'm not sure.
Because I've heard some epic trades across EUAs, for example. I
think you're right. I think it would have to be in the EUA space. Yeah, certainly. Although people were very happy to be named and talk about their trades and talk about their histories and their education, I didn't press them too hard on the cash side. Typically,
on the cash side,
stuff tends to stay. Although if you go back far enough, people are a bit more open.
I was going to say, if you're no longer at the desk, or you're like at the tail end of your career, you're probably a little bit more willing to open up about it. But I talk about, you said before, right? The trader, we tend to attract the sort of personalities, but it would always be over drinks. I've now sober for approaching 3 years, so I no longer get invited to the pub, but I've heard some doozies in my time.
You still get invited, Rene. You still get invited.
I don't have a lot of time for it though. But it's fascinating. I have to do it on the road for sure. That's cool. Yeah, good stuff, mate. I'm really excited. Thank you so much for making the time. Obviously, I'm looking forward to getting the book and doing a deeper dive. Congratulations on, I think this is your third book, right, that you've published?
Yeah, that's right.
Yeah, wow. That's fascinating. Okay. Great.
Yeah.
In addition to your day job, accomplished and published author.
Yeah,
fabulous.
Yeah, it keeps me off the streets.
Good stuff. Owain, thank you so much for the time, mate. I really appreciate it. Really enjoyed that conversation, and I'd recommend to everybody in the audience to take a look out, or keep a lookout for the book. I'll put it in the show notes and put in the link and when we publish it. So thanks very much again to you, Owain, and also to our audience for tuning in. Hopefully you guys enjoyed this episode of This Week in Carbon, and I'd like to encourage you guys to follow, like, and subscribe. All right, take care. Bye-bye.